Hello and good morning. I welcome you to the morning meeting today on Friday, the 27th of April 2018. This is Jens Klatt speaking, exclusively presenting this format to you here for JFD Brokers as the global head of research and education. And we want to have a look at the markets and how things are going after the ECB decision yesterday. And what you are probably already aware of is the fact that, the risk disclaimer, that the ECB didn't deliver anything at all. And this is something which is even more interesting when looking at the current price action. So you might have seen that Euro USD, fell off a cliff is probably a little too much, but nevertheless see some serious pressure. And chances are high that this pressure will continue and that we are probably going for 120 into the weekly close. I think this is something which is definitely realistic. And it also resulted in the DAX pushing up to 12,600 points again. So currently the DAX has some trouble to gain momentum here, to really attack and go significantly after a break of 12,640, 650 points, current weekly highs. But chances are still given, especially as long as there's pressure on the Euro USD. And we're going lower. So currently Euro can stabilize a little and probably retest the region, which I made already a topic in the German version of this format here when I said, that's by the way a 4-hour chart. I'm sorry, I want to have a look here at the 50-minute chart. So where I said, well, pull back towards 129.95, probably 121. It's a potential short trigger in my opinion, and with a stop here above the, in this case, Asia highs, current daily highs, which can be found at 21.17. Probably stop should be somewhere like 2020 or so, 21.20. I'm sorry. That this is a quite interesting setup to go after probably, and short Euro USD against this level then, with aiming for 120 and even lower than that. And the reason why I'm so skeptical can be found here. As already stated yesterday, we have a very strong net long exposure in the Euro future here in this context. This is the commitment of traders report looking at futures, even though the open interest here is small compared to the mainly out of over-the-counter traded FX market, and in this case also Euro over-the-counter traded, or which is traded over-the-counter. It's nevertheless quite interesting as an indication, and perfectly illustrates that there's definitely some serious chance to get to see serious pressure building and pushing Euro lower and towards 120, probably even lower than that, attacking the region around 119.50, which is currently the region around the yearly highs of 2018. And why I'm so skeptical for the Euro is in fact easy. Let's put this in quotation marks, but have a look here at how, by the way, ignore this line. So this is the a line showing that there were lower lows. There was a bullish divergence forming. So in fact, we can delete this, by the way. So it doesn't make sense anymore to have it here. Oh, not so easy. Okay, so it was very interesting because the thing is that the statement the ECB published yesterday read exactly the same as 6 weeks ago on the 8th of March. So it was in fact the same statement. Rates remained unchanged, and all in all, and we're looking at the price action as we did in the last morning meetings of the last days here. Well, what we saw was clearly that the market anticipated a dovish ECB, and when they then come out as they came out yesterday with no changes at all, well, what you usually expect is that the market is then disappointed, and you see not necessarily a sharp, but at least some demand coming into the market then, and the Euro probably pushing a little more aggressive above 122. And the complete opposite happened. So yes, we stabilized around this level, and there was kind of a delay, but in fact, the market sold off from, in this case here, 2 p.m. GMT, and Euro came under serious pressure, stabilized into the evening, and now is seeing some further pressure. Yes, the market can stabilize now. Probably we are retesting this level. Nevertheless, as I already stated, my overall picture for euro now is very, very bearish, because the reaction itself speaks a very, very bearish language, in fact. And I think there's a serious chance that the euro can definitely go, let's probably look at the daily chart a little better, that we can definitely go towards 1950, this region here on the yearly lows. By the way, is it really? Yes, it's the yearly lows, and in fact it's not 1950 but 1915. But nevertheless, that doesn't really matter. Those 20 to 30 pips, there's definitely some good room on the downside. And this weakness is also something which is potentially stabilizing the DAX then. The DAX currently seeing, as I already stated, seeing some headwinds, even though what I call here headwind is ridiculous after this strong move yesterday from 12,400 point now up 200 points within several trading hours in this case, and we're still stabilizing above the intraday lows, even though sure we know fell back below the 50 exponential moving average. This is usually not such a strong sign, but it's definitely something which could probably weigh a little more heavy on the potential intraday action, in this case on the upside then. Nevertheless, I'm still positive, because if we really trigger short against 121 in Euro USD and then go again for the daily lows and probably push below that, aiming for 120 into the weekly close and selling pressure, the selling pressure is kept up, then I think the DAX definitely has a good chance to see another attack at 12,600 points, probably even a little higher than that, going for 12,640 to 12,650 points here on the upside. Sure, we definitely depend on the US equity markets here, and there the problem is that, as already stated in the past, that the weak US dollar was one good reason why the US equities could rise as they did, looking at the Dow Jones, for example, looking at the S&P. And so right now, with the US dollar seeing a quite strong move here, push back above 191 here, and probably not just going back above 91, but aiming for, let's say, 90 to 50 here, region of those November, December lows, respectively the lows here from October, is that correct? Yes, of 2017. Well, this is then something which could hold back the Dow Jones and the S&P to probably gain serious momentum, and it's then something which could also mean that the DAX is not going after 640, 650 on the upside, but instead probably stabilizing, even though I don't see the big sell-off happening. Well, if, and this is the next thing, if yields in 10-year treasury notes do not push aggressively above those highs here, which can be found around 204%, and which is the high from this year, from this week, is falling together here with the highs from the beginning of 2014. So if we push above that level, we are rising to the highest level since 2011. There's further room, and again, there's a potential reallocation in portfolios then, that investors are probably, or portfolio managers in this case, are scaling back their equity long positions and switching it back into treasury notes then, because yields are more attractive, or getting more attractive in this context. And this is something which could then weigh on equities, and we have already seen it on Tuesday and also at the beginning of Wednesday here. There was some serious pressure coming into the markets, and the current price action in the DAX is very similar to the one we've seen here on Tuesday. Remember, we went for the highs last week. Let's zoom out here a little. So these are the highs from last week Wednesday. We went after them, we slightly pushed above them, and then sold sharply off into the afternoon when US markets got hit by rising treasury yields. And this is something you should keep in mind here when looking at the DAX in this context. So even if the euro continues to weaken against the US dollar and is going for 120 because, and this is another quite interesting chart I want to present to you here, one which I retweeted in the morning. Here, it's illustrating here in yellow the German US 10-year yield spread, and in purple you can see the euro against the US dollar. Interestingly, both graphs, charts are usually strongly correlated to each other. Now the thing, as you can see here, German US 10-year yield spread is falling off a cliff right now, showing a divergence of something like 2.4 to 2.5 percent in favor of US yields. And well, we have a strong long position. As already stated, we have this divergence forming here. So it wouldn't come as a surprise if the euro will weaken here. Again, this is something which could stabilize the DAX, even though a rising spread here means nothing more than there's a good chance that 10-year yields in US treasuries will push above this threshold of 304. And if it pushes above that level, this is something which could weigh on the equities in the US, and this is something which could then act as kind of headwind for German equities too, and result in a sharper decline, as already seen on Tuesday. And this is something we should keep in mind, not only today probably, but also in the upcoming week, because now interesting thing happens. If you're looking at the daily chart in the DAX here, what you can clearly spot is that the market is facing some quite interesting resistance here on the upside. It's not only that 640, 650 is the high of the last trading week and this week, but it's also corresponding here with the simple moving average 200. And that means that if we go above that level, there's further room on the upside given, which could easily squeeze us as high as 12,800 to 850 points. So it could be that we are about to see a very, very, very green weekly close here in the DAX if we go above that level. But, and this is the thing, we shouldn't be too cheerful. Respectively, the bulls shouldn't be too cheerful before, because the thing is that, again, this is a very thin line here with the yields, and this could easily form serious pressure. And interestingly enough, I consider the region around 12,800 to 850 points, the region around the lows from November, respectively here December. I consider this to be a serious short trigger for long-term short engagements, against which the bears could step into the ring here and then aggressively start to sell the DAX. So this is definitely a region to consider. And again, there's good and potential short-term squeeze potential on the upside if we make it above 12,640, 12,650, but it's not sad that we are easily making it back towards and above 13,000 points, but we could face some really strong trouble here, and selling pressure coming in around 12,800 to 12,850 points. This is definitely something worth keeping in mind for the next trading week here in the DAX then. Yeah, that's it around the DAX. That's it around the euro. Oh, sure. I mean, not that I've forgotten it, but that's definitely noteworthy. Well, pound sterling is falling off a cliff. What's happening? I can show it to you. 1 second. Let's go to a very great source, which is completely for free. It's called Trading Economics. And there you will see it here. UK GDP growth is the weakest in 5 years. So it's in fact that we only saw the data for the last month coming in at 0.1%. You can see it here. So it's the 27th of April. That's today. 0.4 was previous. The consensus was 0.3, and we came in at 0.1 quarter on quarter. And the same is true for the data year on year, which came in at 1.2 against 1.4 expected. To make long story short, well, it's not only that inflation disappointed, and that Mark Carney last week on Thursday said, well, there are several other BOE meetings here where we can decide to hike rates, which was interpreted as dovish. But now the UK economy, on top of that, sees some trouble in general, obviously. for whatever reason, doesn't really matter. But what matters, in fact, or in case of GBP USD, is the following. Well, have a look here at this chart, which I, oh, by the way, no, I took it away, but let's get it back here. So what we've seen is that last week, at the beginning of last week, we still saw a chance, or market participants here, when looking at the overnight index swap rates, market participants saw a serious chance that here the Bank of England will hike rates at least once till mid 2018, and was certain by nearly and really significantly above 80%. And we fell off a cliff here. So this chart is from Wednesday, and I can definitely say, without having an updated chart here, that now we see a drop. We saw a drop thanks to this data set, which was just published around the GDP data from Great Britain, that we slipped below 50% here. So the market aggressively priced in a rate hike probably in May from the Bank of England, and is right now really disappointed by the data, combining it with the words from Mark Carney, and seems to not expect such a rate hike anymore. And yeah, so what's the result? Pound sterling against US dollar pushes below 138. So in fact, by the way, a few minutes ago, I was asked, or no, it wasn't that was asked, that's wrong. But yesterday, around the ECB, I had a short live stream running, and I tried to explain, only in theory here, how to trade such a news event, and how to act accordingly, and not just jump into the market and hope that the market will probably push up higher, will push higher or lower. And I tried to make it as clear as possible. I'm not sure if I was successful with that, but the great thing is that today we get a really good chance to have a practical example here on how to trade such news events candles, let's call it. So this is the news event taking place, 50-minute chart. And so what we wait for is that the market shows not only a reaction, but sustainable or momentum, which can be considered sustainable. And then I said, well, what you usually wait for is that then around 1/3 to half of the candle is retraced, and this is the region where you consider a short engagement against, in this case, or a long engagement, depending on whether the candle is up or down. Placing the stop above the news candle, in my case, I'd go for a stop here probably a little slightly higher than that, 38.90. And in fact, as you can see here, 30 to 50% can be found with Fibonacci in this case, clearly made visible here, within those two in this region. Let me work with an ellipse here, for example. Let me just do this that way. So this is the region you consider to short then the currency pair against, in this case, and trade in direction of the momentum, and it worked out perfectly, as you can see here. So the short would have been taken somewhere between 38.30 to 38.40 here, and as you can see, we're dropping from here in direction of the momentum. So currently trading 40 to 50 pips lower, and this is how I approach news events in this case, and how I trade such news candles. And yeah, as already stated, it's a perfect example for today, because especially after I made this a topic around the ECB, but not sure whether my thoughts were clearly presented and people can really profit from them, or could really profit from them. Yeah, and so let's go back here to the 4-hour chart. Well, the candle itself is a clear sign, and it's quite likely that we are about to see further pressure forming, which could also drive us in pound sterling lower towards 137 here. And by the way, some final thoughts on pound sterling. Some might now wonder, okay, and what happens if the Bank of England now, let's put it that way, say by surprise, hikes rates in May? Well, this could then we get to see some high volatility, I think, with a sharp push higher in pound sterling in this case. So that's definitely something worth considering. The stronger we see pound sterling now being sold, the higher the chances that with the rate decision of the Bank of England in May, that we then get to see a potential higher pound sterling, at least short term. If they come out with a rate hike, then for sure, but also if they do not come out as dovish as market participants currently are expecting the Bank of England to come out. Not only that they are currently selling pound sterling because they are disappointed that there probably won't be a rate hike, but also because they probably do not expect Bank of England hike rates before, let's say, the end of 2018. Everything which is giving at least a small chance that there will be a rate hike, even in the near term, next 3 months or so, well, gives a chance that pound sterling will see some serious pullback here on the upside. But that's something we want to consider a little later on then, probably right before the next rate decision from the Bank of England. All I want to say right here is that this is definitely, or that currently intraday engagements in pound sterling should be, or engagements in general, should consider the short side way higher. The probability that it will continue to move lower is significantly higher than it will now aggressively turn around, especially after US dollar also sees some serious backwind after making it back above 91. So, and finally, let's have a look here at dollar Japanese yen. We are now consolidating here. So this is really a short one. We're consolidating on an elevated level. The interesting thing about this is that this is exactly what I was talking about, that I do not really expect, let's do it that way, that I don't really expect yields here to push above 304 then in this case, but probably see some slight stabilization and some sideways action here, which is then also the reason why dollar Japanese yen, which is usually strongly positively correlated towards 10-year yields, that we are then stabilizing at an elevated level. Well, and next week, let's have a look here whether we can then trade such a squeeze breakout here out of this range, because I consider chances to be higher that dollar Japanese yen will at least see a final push and test the region of 110, but not sure if this will be sustainable. Same is true for the dollar yen as it was already for the DAX. The push could happen, probably rates induced here at or yields induced, that it will push higher, but nevertheless higher yields could also result in kind of a risk-off mode in equity markets, which is then favoring Japanese yen, and then probably seeing a sharper decline here. But first of all, let's wait for this consolidation area to form, and then formulate a potential trading setup out of this range here with a potential squeeze. Yes, and that's it from my end. So if you have any questions, please feel free to contact me via email or via Twitter. I'd really appreciate you answering your questions. And now I wish you all the best. A nice weekend. Take care. Enjoy yourself, and talk to you again then next Monday, 9:30 a.m. GMT in the morning meeting. And that's it for now. So have a nice weekend. Talk to you later. See you, and bye-bye.